May 30th, my son's 14th birthday. What to say? A little trout out for Kamal Evers. Oil prices trading a little bit down this morning. It's sort of wibbly wobbly one day to the next, under nearly a 1% decline in the aftermath of the apparent deal in the US on the debt ceiling. What does that open up now? Let's kick off with Adi Imsirovic, Director of Surrey Clean Energy. Adi, after the clouds and the sort of downward pressure that the debt ceiling fight in Congress had for the last month, now that cloud is lifting, does it allow us to have some clarity on the other more fundamental supply-demand balances? What's your outlook as we go forward from the debt ceiling fight?
Morning, Sean. Morning, everyone. Well, you're absolutely right that the debt ceiling has introduced what we call bad volatility or uncertainty in the market, but unfortunately it's not lifted yet. It still has to go through Congress, even though, I mean, the chances are that they probably will, but certainly it's kept sort of a negative sentiment there in the market, there and abouts. I think there is a fair chance that the market may see some recovery, but now we're hitting the sort of the OPEC conference again on June the 4th. So there are just too many uncertainties with the rumors of Saudis sort of having private discussions with the Russians and not being particularly happy about their position. So I think we're just moving from one uncertainty to another. The question is, I would rather move on to OPEC now. What is OPEC going to do next? And most likely nothing. But that's so far we've seen that that's not sort of the way the OPEC Secretariat have been operating, and they've always been working on an assumption of surprising the market, ideally to support the market to the upside. I think OPEC is in a very difficult situation right now, so it's going to be very, very hard for them to do anything. They've done the voluntary cuts, nothing happened. Market didn't get supported. You could blame the uncertainties coming from the US and the debt ceiling, but maybe it's not. Maybe it's China. There were a lot of still negative news coming out of the Chinese market. So a lot of things to discuss this morning, Sean.
Well, Mark Ostwald, Chief Economist and Global Strategist at ADM Investor Services International. Adi just touched on China at the end. It seemed to me that's the biggest sort of actor to emerge behind the cloud of the debt ceiling fight. That where the hell is China demand recovery for the second half of the year?
It's going to be, relatively speaking, tepid. I think the signals that we've got, basically, if you looked at some of the corporate results that we've had recently, it shows that Chinese consumers, who I think really are the key in all of this, because the Chinese consumer private consumption demand just isn't recovering in any way to the extent that people thought it was going to be. They're basically buying big at discounters, and they're not buying big at the normal retailers. So that tells you a lot about how, the lack of confidence in China, quite broadly, is still impacting things. And it is, sadly, to reiterate a point I've made many a time before, it is sadly down to the fact that the property sector woes haven't been resolved. And it's a classic case of everything is a confidence game. And having shot the confidence of the consumers, restoring it is actually going to take quite some time and quite a big effort.
Lori Hatayan, MENA Director, Natural Resource Governance Institute, with a very unusual flag next to her headshot from Belgium. I myself was in Lebanon recently, and I have to say, had an incredible week there. Obviously, lots of challenges, but there's still life in that old dog yet of Lebanon. Lori, I want to get your thoughts on the subject of whether there's any gap emerging between the Saudi-Russian position that's been sort of bouncing around, if it's just sort of pre-OPEC meeting noise, or could we see some divergence in their geopolitical priorities as we go forward? Your thoughts on that narrative?
Look, whatever the gap is, they don't want to keep it widening, I guess. It's not in anyone's interest. So they will be working on that issue. At the end of the day, if we go back to the market, the last thing the Saudis want is like, in the sake of increasing the prices, to cut, and then this cut being replaced by the Russians and Iranians and others. So that's why I think the focus will be on that issue of how Saudi Arabia can keep the balance of the prices, at the same time not to keep on losing the markets to the Russians. That will be a problem, and that they need to fix, because that is the most important issue. But don't forget as well that from the beginning, these two entities, like the two countries, Saudi Arabia and Russia, are very pragmatic. They don't talk about like big values, etc. They're like, whatever works for us, we do. So, for instance, when there was the Arab Summit, so Zelensky was present. The president of Ukraine was present there to talk about it. And when we know that kind of the Arab world was aligning with Russia. So they've done that because they had an interest in doing that, and we haven't seen like
what is how do you explain that? I mean, I must say I was a little bit surprised that they facilitated Zelensky's arrival. A bit like, you know, you'd be surprised to see Xi Jinping go to Kiev. Why do you think the Saudis made that decision? What was in their calculation, do you think? Because obviously, on the face of it, it was going to irritate the Russians, their partners in OPEC Plus.
Exactly. So basically, there are like many interpretations for that. First of all, because the Saudis are always saying that Saudi Arabia comes first, whatever it's in our interest, in the interest of the region, we're going to do. If we see that inviting President Zelensky serves a purpose, we're going to do, to say that we can play at the same time, we can play the mediator role. At the end of the day, one day, someone has to play that mediator role between, like, to end this war. It cannot continue like this or unnoticed, the forgotten war, because it has implication on the world. It's not just like two random countries that are at war. So that's one. Second, I guess it's again like a kind of very, very specific to the Arab world, because don't forget that in that summit, the president of Syria was back into the Arab fold, as we call, and there were a lot of resentment. Not very everybody is happy about that. So they wanted something bigger than at the end of the day, that summit being about Bashar al-Assad to come back to the Arab fold. So they covered that with something bigger. So nobody talked about Bashar al-Assad, and everybody was talking about President Zelensky being there. So there are like very complex, this new politics that is being shaped in the region by Saudi Arabia and the UAE and the rest. So these are like the nuance, if you want, politics that we need to look for it everywhere.
Adi, we mentioned China there. There sort of seems to be some kind of, you know, double narrative in a way. We've got the benchmark stock market index in China hitting a bear market, down 20% in this 4 months or 5 months of this year so far. And meanwhile, according to energy intelligence research, China's oil demand topped 16 million barrels a day last month, which would be an all-time high. Lots of imports. How do you see these two things coexisting? The macro data looking relatively uninspiring, and yet there seems to be a lot of imports still going to China, whether that's consumption or imports, but a bit of both. And yet, so these two things coexisting, will they sustain?
That's a great question, actually. I saw that a couple of days ago with the energy intelligence, and I was actually surprised myself at the data. So most likely the devil is in the detail, in the data. I think most likely what's been happening. Let's not forget that however good the most recent sort of ship tracking, stock tracking in China is, it is still a bit of a sort of a black box or black hole. It's very, very hard to get the proper data on the inventories in China. I think China for several months have been exporting, utilizing very high margins. They're exporting a lot of products, and quite likely, I think they were drawing down the stock and now they're just basically replenishing stock at lower prices. I think that's the most likely scenario. I don't necessarily, as Mark said, I'm not particularly bullish China at the moment, especially because their property market keeps being very, very problematic. I think several times in discussions with you on this show, I've said that we've got almost a subprime situation in China, and it's kind of stop and go situation. Every time they try to revive the economy, they let the property market go. Then they're worried about debt. Once they get worried about that, they try and slow it down, and that in doing so, they slow the whole economy. The other thing with China, which I think we haven't spoken about, is that I think economies, obviously, lack of data is a problem, but I think a lot of economists are struggling to see what's going on in there, because China is becoming a mature economy. And now we're going from industrialized part of the sort of spectrum to the service side of things. So industrialized part of the economy has been slowing down and not being revived at all, whereas the service side of things has been doing very well. And I think economists find it very hard to read that.
Like any other OECD economy, if you like, grows at 2 to 3%.
Absolutely, we're going back, and obviously, we're talking demographics don't happen overnight, but the demographics are a big factor that we should have been talking for the last few years, and they are maturing. They're becoming a mature economy, and I think a growth of 5% is quite exceptional for a mature economy. So that I think also, let's not, just one more point, Sean. I think we keep forgetting that China also are very aware of how vulnerable they are to the imports of the Middle East crude and other oil. And I think this idea of coupling of oil demand with economic growth is going to fall apart. I think that they want to decouple from that at some stage, because they can't carry on, growing imports.
Mark, the other sort of clarity, if you like, or re-emergence after the cloud of the debt ceiling fight is, where are we on this infamous recession and rate hikes and inflation narrative, which got kind of smothered by the debt debacle? Now we're seeing that resurge. We had the news earlier this week or last week that Germany had gone into a technical recession. There's now talk that the Fed may go again on rates. Where is that narrative, that growth, which of course was depressing the outlook for demand?
Well, I think we need to start with the inflation picture. And I think the most important thing in terms of the inflation picture that we all seem to have forgotten, including many central bankers, is there were always going to be second round effects. They are proving to be quite stubborn. Energy prices may have come down in quite a lot of places, but they're still higher than they were. So businesses' base costs have risen. And then, of course, there's the wage rises that we've seen. So it's not going to go down in any great hurry. So we've now got a very complex situation where central banks need to look at some of the demand destruction that's there, consider the fact that the debt ceiling at the margin will probably deduct something like 0.5 percentage point from the US growth outlook if it's passed. Germany, I wouldn't want to actually go too much on Germany. Germany has structural problems which have been on the rise for 20, 30 years. They've been inordinately complacent about their energy supplies. They've been inordinately complacent about how they transition their major industries, particularly the auto sector. So we're left in a situation where there are a myriad of uncertainties. Inflation is going to, it is going to come down, but it's going to be a very slow, tortured process. And perhaps the most important thing, I think this is where the markets have been getting it wrong all the way along. It's not whether the Fed do 1 or 2 or no rate hikes further. It's the fact that rates aren't going to come down anywhere really, other than perhaps some of the emerging market countries like Brazil, anytime soon.
And the other point, just to follow up on that, Mark, is that Europe and Germany being the biggest economy in the EU, benefiting greatly, you would think, not only by the cheaper gas and energy prices, but also the weak euro.
Yeah, well, the weak euro is a double-edged sword. I think the weak euro actually only exacerbates those inflation pressures, and that's probably something that Europe doesn't really need. But I don't think it makes that much difference. It's very marginal. On the other hand, I think the fundamental problem with Europe is, well, the EU is they still can't actually fashion a comprehensive energy policy. And at the moment, those gas prices where they are is just because demand is weak and all the storage is filled up. It could easily flip the other way. If one looks at the premium over Asian natural gas over European ones, you have to think that perhaps at some point, if we see a pickup in demand, the gas prices can flip in the other direction in Europe.
Laurie, let's talk a little bit about the Turkish election. What obviously it ended up not being that surprising after the first round results signaled that Erdogan was going to get over the line. But ultimately, a few weeks and months ago, there was a sense that maybe this was the end of Erdogan after 20 years, but no, another 5 years. Let's first talk geopolitically. What are the ripples from this in the region, in the Orient, if you like?
Look, from what we've seen, like after the election and the results, like most of the countries in the region, they were like congratulating Mr. Erdogan for his win. So I think at least because there were all these uncertainties about like new leaderships or old leadership coming back everywhere in the region, especially in the Eastern Mediterranean. There were the Cypriot elections, there was the Turkish elections. Now we're waiting for the Greek elections to happen. So these are like important if you want elections, because we want to understand like who's going to lead the next phase, because there are implications, instability in the region and on oil and gas, especially that now we're seeing like some movement in the Eastern Mediterranean, American companies moving, the Cypriots are moving hard now about like imposing like kind of like one idea of them, like how Cyprus could be important for the gas and to be maybe the one transit route, which will mean that I don't know how Turkey will look at that and what's happening between Cyprus and Israel nowadays and recently, especially that Turkey wanted to be really to dynamize the relations with Israel, and as you know, because Turkey kind of like talked with Russia about like potentially Turkey being a transit, energy transit. What kind of energy transit? Is it just transit or the energy hub? So is it just transit or is it like to do more? So Turkey is going to look more into as well their own oil and gas, because Mr. Erdogan promised the Turkish population that they will become energy independent. So he wants to work on that. He has already struck some good points on that with discoveries. He wants to continue on that.
Do you think he turns a bit more Western again, accedes to Sweden joining NATO, tries to attract back some of that Western FDI into Turkey? What's your thoughts on the outlook for that?
Look, he has to focus, and he knows, and everybody knows that he has to focus on the economy. The economy is not doing well, so he has to focus on the economy. So that's why I guess like it will be like all the calculation now that you will have, because like they're over with the elections. He played the religious card, he played the nationalist card, he played everything to win, so he won now. So now he has to deliver, especially on the economy, because the economy is not doing well. So he has that in his mind, because if this is his last term, and he said this will be the century of Turkey, what does it mean, the century of Turkey? I'm sure that it doesn't mean that he wants to go to wars and conquer, I don't know what countries. He just wants to make sure that the economy is doing well. So in that prism, that everything will be about the economy, he will try to play all his cards to bring investment into Turkey, to play with, to look back to his Arab neighbors that for years they were playing an important role in the.
Well, the Gulf states did put a lot of money in his central
Exactly.
bank in recent months to stabilize things.
Yeah, so they want more. I think they want more. Everybody understands that putting money in the central bank stabilizing doesn't mean much, because they want investment. They want more investment. They need more jobs, etc. So this is what he has to do. So this century of Turkey that he talked about. So let's see what will happen. Again, it's about the Europe. It's about the Arab world. It's about the Eastern Mediterranean for now, and definitely his relationship with Russia is important as well.
It strikes me he has to become a little bit more predictable. It's amazing, after 20 years, you still don't know what this guy believes in. It's a rather extraordinary chameleon performance. Let's go to the survey question and get the views on the room. A key gauge of Chinese stocks was on track to enter a bear market, 20% down in 2023 on sluggish economic recovery, weakening yuan, and tensions with the US. Do you still buy the H2 second half of the year China oil demand will rally? Yes or no? Are you still buying what they're selling? At every conference I've been to, even last week here in Dubai with the MPGC, it was the same cake was being sold. Second half of the year was gonna be bionic in China. Adi, I wanted to get your thoughts. I mean, the big question, again, just sort of drilling down a little bit into this Saudi-Russian piece. Obviously, a big factor this week in the meeting of OPEC Plus, reporting. We've included it ourselves. Nice dramatic headlines, of course. Oh, big breakup, blah, blah, blah. But the idea that Russia would, be willing. I mean, they have both spoken, in which the indications have been slightly contrarian. So that part isn't being made up. I.e., the Russians said no more cuts are really necessary. The Saudis have said we're going to get you short sellers. So I'm wondering, from this Russian position, they're not cutting anyway. Would you expect them to meet these 500,000 barrels a day, or are the Gulf states going to have to carry this bucket of propping up prices by themselves?
Okay, that's a really important question, and I think that's sort of looking forward into the market. So probably the key issue. If you just allow me, or back
Yes.
on your survey question, I just wish you had a third option. I have no clue.
Yeah,
I think it would have been quite appropriate.
we'll put that in tomorrow.
Going back to Putin-Saudi dynamics, this is how I see it. The Russians are at war. They're burning money, as we all know. Any war will do for you. And Russia absolutely has no way of reducing their exports. They can't do it. I think I've said it last time when I was here with you. It's their only cash cow at the moment. There's no gas. Gas wasn't much of a cash cow anyway. It was a strategic weapon, political weapon, but now they have oil, and oil is all they have. They cannot reduce their output. So it's very unlikely that we'll see any cuts whatsoever. If there is some changes in exports, there'll usually be some sort of fudge, moving from products to crude, because crude is more fungible, easier to move, and so on and so forth. But let's just remind ourselves of the whole relationship. I never believed that the Saudis particularly liked Putin, and they were sort of in bed with Putin because of some political conviction. I think the genesis of this relationship goes back to 2020, and I think it's worth remembering how it started. It started with the Saudis saying enough is enough, and actually creating one of the weakest markets we've seen, many of the young traders have seen in their lifetime, going to negative WTI and so on. So the Saudis every now and then have to use their key weapon, if you wish, or I call it a whip, which is excess capacity. And I think they really mean it. And when they've used it, everyone else came to fold, including the Russians. Putin is very pragmatic, and he simply realized that there's no battle to be won with the Saudis in that respect, and he needed higher prices. I think right now Russia is in a very, very difficult position. They're expected to cut, but they can't. And Saudis and everyone else in OPEC is a little bit impatient with them. So those dynamics, I think, are going to determine the sort of a lot of the future of the oil market in the months to come.
Mark, I suppose how you answered the survey question asked today is in a way also plays into this thesis of this Russian-Saudi divergence potentially, because if we don't have an Asian recovery on demand, China being the principal, then market share in Asia does start to surface as a tension point in a weakening economic outlook, not only in China, obviously, but now India capturing a lot of market there off the Iraqis and others into India. So where do those two things coexist, do you think?
Well, I mean, it is complex. I mean, I think with China, we always seem to forget that it's not, we're looking at Chinese oil imports and thinking it's all about their demand. China's always opportunistic in every single commodity market. So if prices go down, they're going to be in there saying we need to restock, or we need to just stock up, even if our stocks. The Russia part of it, I mean, Chinese demand is obviously key to getting a bit more traction in Asia. And when we look around Asia, there's plenty of spots where one's worried. South Korea is obviously one. Southeast Asia, on the other hand, is really quite dynamic. So I think where it plays in is there is the third element within all of this, because it's not just Russia who's not reducing output. It's the fact that the other two black sheep, if we like to call them, Iran and Venezuela, are also supplying more. And that's really, to me, the most significant part that, which really keeps a little bit of a cap on oil prices, particularly if we're looking at a rather meager growth outlook, if not a recession risk in Europe and North America. So there are a lot of headwinds for the oil market.
Laurie, let's give you the last word today on yet another geopolitical question, which is as all things Iran. We saw in the last few days, China's oil demand will rally. Yes, still buying it. But in terms of the Omani Sultan of Oman was in Iran yesterday. The head of OPEC, Secretary General, was in Iran earlier over the weekend, I believe. The rapprochement between Saudi and Iran. Iran essentially exporting as much oil as it wants to at this point. Where do you see this, at the kernel of it, this rapprochement Saudi-Iran now starting to show some foundations?
Yeah, definitely, because we did see the rapprochement, we did see all that meeting, and then we didn't see much of what's happening. There were a lot of talks about like investments, etc. So it's slow, I think, and because there is a lot of mistrust, so they want to build that confidence. And I guess like for the OPEC chairman to be in Tehran to talk about like OPEC plus meeting that will come, what the position of Iran will be, all of that, I think they are testing the ground to see like how they can build the confidence again. So it will be like a very slow comeback to Iran, to the region, and to be a player that they can rely on in this play, because if and always they're saying as long as there are sanctions, it's really a bit like we don't know how to deal with the Iranian oil and gas, but like now that you're back, we talk to you, so let's kind of understand where you are and what you can do and what we can do to balance the market. And even like the president of Iran said that please OPEC play a role in like calming the market. So these are all confidence building measures, I guess. And we are like, it seems that everything is okay, but we're watching to see how much of that will continue.
Where does this sit, you think, Laurie, in the context of Israel as a big player in the region, which obviously quite cross at this, it would appear, this rapprochement, but the Iranian nuclear program has certainly gone off the radar on any level of conversation, but yet obviously is still there. Israel is still there. is everybody just happy to coexist at the moment? What's your read there?
Look, as long as Iran is peaceful, they would say that, okay, let them have the bomb. Everybody says that Israel has that bomb, but that doesn't use it. Pakistan has that. So, you know, as long as they can control or kind of like predict what Iran will act in the region, and Iran is finding its way in the region and it's feeling comfortable, they think that even if at one point they have that nuclear capacity, they will not use it, but it will be kind of stabilizing the region, and it will be Iran talking to others from equal to equal. And so this is, I guess, like one point maybe now today we understand, because definitely no one is talking about JCPOA, no one is talking about the nuclear program of Iran, but that doesn't mean that Iran is not doing anything about it. It's just that it's under the radar. So as long as Iran is part of the region and so that will be kind of, okay, so you're in the region, you're playing a stabilizing role. So maybe we just like pretend that other thing, which is the nuclear power, is now not important. So
and it's also
this
another
is how
way.
the reading is.
It's another way of signaling to Israel's very right-wing government that they need to pull their claws back in a little bit, that had become quite aggressive in their posture, not only against the Palestinians, but beyond. Perhaps there's many messages coexisting at the same time, but it's certainly one to watch. Calmness in the Middle East is always an uncertain place.
Just one thing, I know that we're out of time. It's like, I think now the next level is like everybody to watch about the Saudi-Israeli potential relations, and how that will be, what will be that relations. I think like now everybody is looking at that, since now everything is calmer in the region. So I think we should watch that. Yeah, exactly.
That would be the big NEOM's launch. We have to leave it there. Brent trading down 0.5% at $76.60. Still relatively healthy and stable and not moving. Not a lot of wind in the sails at the moment. Let's thank our panelists, the mighty Adi Imsirovic, whose book is amazing, and we have a podcast coming out today with 3 of the authors that Adi has used in his new book in their chapters. And the podcast was a panel discussion about the whole reconfiguration of Brent. So thank you, Adi, for setting that up. Mark Oswald, thank you so much for your insights today. And Laurie Atayan, lovely to have you back at the table. Look forward to seeing you guys all again soon. All the best. Thank you.
Great to see you all.
Thank you. Bye.
All the best. Bye.